Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing day today. In today's video, we are taking a look at Bitcoin's price action, going over the charts in massive amounts of detail, the short-term price action, the macro charts, the daily charts, and most importantly, discussing exactly what is happening and what you should be expecting next. By the end of today's video, you will not only have a detailed understanding of what is occurring, but you'll have a plan to execute moving forward. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. That is the kind of content you are interested in. Join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in the VIP group with nearly 700 members. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart education chat, our news, our help, our daily video, and our trade setup chat. If that is what you're interested in, go ahead and contact me in the pinned comment of the free channel by clicking my name or these links. You can find more information about the VIP via this link. It's a video tour, as well as our trading track record right over here. 39 months of recorded transparent data, a 81.16% win rate, 1,062 trades. Check it out, and let's jump into the video, starting on that price action. So taking a brief look at the last 24 hours of price action, we can see Bitcoin has been struggling to really push past that $64,000, most importantly $65,000 horizontal resistance. That $64,000 region was, of course, the prior area of support for this about 15-day long horizontal consolidation at that 69 to 70,000 high point. Of course, we then saw multiple retests of this low before an eventual continuation toward that range low point upon the breakdown. We have now seen the price action over the last couple days retest this area now as a resistance, but unable to break through. We now know this is a major resistance as well as a bullish trigger point where, if broken, should result in that next leg toward the upside. Until then, it is going to be our local resistance, prohibiting or preventing that continuation. We'll be discussing in more detail what this means in just a moment. Since then, we have of course seen a short-term correction, and we're discussing once more what this means in our video today. Looking at the higher time frame charts, Bitcoin is still very much sitting above the midline of the channel, which is fantastic. And of course, in today's video, we'll be discussing what this means and why we need to be paying attention to this level. Moving over to the market data, 24-hour volume is up 29%, sitting at 116 billion, and 24-hour liquidations are sitting up 37% at 115 million. Of the 115 million in liquidations, a massive 98 million have come from long positions and only 17 million coming from shorts. Again, with that price action correcting over the past 24 hours, we saw a whole bunch of late longs open up at this resistance as the price action rallied aggressively as a consequence of the break of the midline and that horizontal neckline resistance. And these longs have been slowly closing out, of course, as the price action has been dropping downwards to retest some of these short-term support levels and fill that VRPV gap. Moving over to the DXY. The DXY is showing some short-term strength at our sell side liquidity. Of course, we told you guys a breakdown of this region, this major yearly uptrend, would eventually result in a continuation to the sell side liquidity. We did expect a retest and rejection first. That did not occur. That is perfectly fine because the overall direction of the price action still met that lower target. We are now sitting at an area of support. We know that if the DXY goes down, we are more likely to see risk assets go up, and if the DXY goes up, we are more likely to see risk assets go down. They do have this general inverse correlation on the broader scale. So now that we are at an area of support, we do need to consider possible signs of reversals, and this may be a short-term reversal as we are seeing a Bitcoin, or if develops a higher time frame reversal, which we'll be discussing as well how that could potentially occur. But if we do see the DXY drop below this support level, we do have CPI data coming out soon, we've got unemployment rates, we've got NFP, we've got interest rate data. If all those things come out positive, again, we could see the DXY crash towards that lower level. And if we zoom out on the weekly, we can see a massive breakdown of a huge symmetrical triangle formation is on the way. There is no reason to assume that the DXY will reclaim this uptrend. And therefore, we are expecting macro directional continuations for DXY sub $100 in the near future, which of course is bullish. This could be a catalyst for a continuation up for asset markets. The S&P 500 seeing some short-term resistance over here again, with the DXY bouncing slightly. It is normal for us to see risk assets bleed off a little bit as money is flowing back into cash. What we can see over here is, of course, we do need to break above that weekly high point to then see that directional continuation into 6,000. As we can see, this is going to be our local area of support at 5,300. Provided we sustain above that, we do expect the directional continuation to 6,000 to occur. If we do close a weekly candle below this region, we will enter a high time frame downtrend for macro corrections to 5,000. That is it, guys. Let's go ahead and jump into Bitcoin. We have so much to talk about. But before we do, if you do want 15 to 45% discounts on your trading fees for life, plus healthy returns, healthy rewards in USDT, sign up to my links down below, BitUnix, BitGet, or BingX. You can join with the links in the description to get access to those discounts and those rewards, as well as supporting the channel. We'll play a quick ad if you're interested in doing that. Check it out, watch the ad, and we'll jump back into a video. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and get stuck on back into it. And we're going to be taking a look at the price action first and foremost on the short term, discussing what is happening, what you should be expecting next, potential movement opportunities for Bitcoin, and then jumping into the macro charts. So like we said just moments ago, Bitcoin has been seeing some short-term downtrending price action now for about 24 to 48 hours, mostly through that weekend period coming into the new week. We can see that Bitcoin is moving towards two key short-term levels. The first one being our buy-side liquidity, which is going to be the highest point reached on this liquidation week. Of course, we are retesting this point right now. And then that second point being the horizontal neckline resistance between the price points of 61,700 to 61,300, marked out by this horizontal channel. In fact, this horizontal channel makes up one of two parts of the larger channel, which is going to be that range low of the channel and the range low high of the channel, which is basically that horizontal consolidation we had for a period of around about 2 weeks before we eventually saw the break upwards and continuation through that daily midline. We discussed many weeks and many days ago how we would likely see a strong daily close above that midline when we broke above, and we have seen that close. We'll come back to this chart in a moment. Again, since then, we have met our first major resistance, this resistance being that $64,000 resistance, which is, of course, the prior area of support of that consolidation that we experienced late July. We can see we are now retesting this area of resistance. Now with this, Bitcoin also has two other important levels. This is going to be number one, our major uptrending trend line, which is a representation of the trajectory of the price action. Since we bounced from that low point at 49,000, we can see Bitcoin has been in a very clear uptrend since that point, as well as if we look at the VRPV, we can see there is a slight gap in the VRPV, which comes down to around 62,200, which lines up with the 50 EMA as well as this uptrending trend line. So we do have some confluence over there. So let's discuss the possible potential moves that Bitcoin could undergo in the next 24 hours and what we'd expect from that. So let's first talk about the bullish case scenario. Bitcoin to continue upwards and to move into this upper territory of price action, which will facilitate a move to retest the range high on the macro descending channel, that $69,000 region. We would need to see Bitcoin, and this is a necessity, we would have to break above this prior area of support, which is now a resistance. This area of resistance 100% needs to flip as a support, and we need to sustain above 64,000 to then expect directional continuations higher. That needs to occur. Now, for that to occur, Bitcoin will need to do that prior to breaking below the neckline level of support. So we take a look at our neckline support, which is over here. This neckline is also a representation of the midline of that consolidation. They line up almost perfectly. So therefore, we can say if we drop below this neckline of support, we will as a consequence be dropping below the midline as well. And we'll come back and discuss why that's so important in just a moment. But essentially, dropping below the midline shifts the probabilities in favor of a directional continuation downwards as opposed to a directional continuation upward. So a loss of the midline could be a bearish trigger point for a continuation down for Bitcoin as opposed to what is expected to be a continuation higher. That is a very interesting point we do need to pay attention to. So the bearish scenario for Bitcoin is going to be if we see a loss of our buy side liquidity, which we are currently retesting as a support, we could see Bitcoin move towards this neckline of support where we will likely, very likely find support and then continue through that resistance. That is going to be the bullish case scenario for Bitcoin. If we do not see a drop below our buy side liquidity, we will not see a loss towards that neckline. This will be the local low before we then see a continuation higher for Bitcoin. Pay attention to that on the short term. The short term is not very complicated. We don't need to overcomplicate it. In fact, we can keep it quite simple today. Looking at the uptrend, again, guys, this is going to be that uptrend we just mentioned. If we do drop below that uptrend, I'm not going to be too concerned. In terms of significance, the uptrend is less significant in comparison to this horizontal level. The reason being we only have 2 points of contest. We only have 2 retest points, which again is a weak trend over here. So I wouldn't be too concerned if we lose this uptrend. More so, I would be very concerned if we do lose that horizontal level. So we're focusing much more on the horizontal level, using the uptrend with the VRPV gap and the 50 EMA as simply confluence for a bounce. But we're looking for an actual reversal at that horizontal level if it is retested. Again, if we drop below the buy side liquidity, it is likely we retest it. If we do not do so, it is unlikely we retest it. Looking at Bitcoin again, if we do drop below this region, it is likely Bitcoin could see a continuation much lower, potentially 54,000. Before that to occur, we would need to see a daily candle close below this horizontal level, and let's go ahead and discuss why that's the case. So moving over to this chart, we can see Bitcoin is still very much sitting above the midline. And as we have seen historically, when we close a daily candle above that midline resistance, we eventually see directional continuations to the range high. We have seen that twice in the last 5 months. Now with that, we could also see when we close daily candles below the midline, over here, and over here, we see eventual continuations to the range low. So we know that the midline trigger point, or the midline level of the channel, is a trigger point which increases the probability for directional continuations toward the range high or range low, determining or depending on the direction of which the price action broke through the midline. So we break through the midline from the bottom side, we generally continue toward the range high, and vice versa. Now, there have been instances where we break below the midline and then either retest the midline or even drop back below the midline before continuing to range high. And that is because when we see a daily close above the midline, the probability is a retest of the range high in comparison to a retest of the range low, even if we see the price action drop momentarily back above or below it. Again, the reason being is because when we see a break of the midline, from what we have seen historically, okay, this is only going on what we have seen historically, it is more likely we will retest the range low or range high prior to retesting the other side of the channel. So in this instance, while Bitcoin remains above that midline, it is expected that we will see a directional continuation to the range high. That won't be immediate. As we said already, it will take time. What we can see according to the VIPV is we see a whole massive volume chunk over here. In comparison to the bottom side, we don't have much. We have much more volatility occurring on the lower side of the channel, which is underneath the midline, as according to these wicks over here, these large movements, in comparison to what we have seen on the upper side, the range high of the channel, we have much more resistance to break through. So if anything, the move towards the range high is going to take a considerable few weeks. It is going to take time. It might take 2 weeks. It might take 3 weeks. It might not even occur. But if it does occur, it isn't going to be rapid unless we see external news events come out that massively bolster the appetite for Bitcoin. It is likely we see a slow, gradual climb upwards in this movement towards the range high. Again, especially because of significant historical resistance, and of course, we are still within the confines of this macro channel formation. Now, we talked about the possibility for a high time frame bearish reversal for the S&P 500. For Bitcoin to enter a high time frame downtrend, a lot of different things need to occur. But if we're looking at it from a structural perspective, a daily candle close below the range low would need to occur for us to invalidate the expected bullish breakout, which is expected as a consequence of the structural formation we're developing. This is a descending channel formation. They eventually result in bullish reversals. If you want to look at that again, you can look at the daily, the 3-day chart, the weekly chart. We can see that momentum is actually drying up for the bears. We can see momentum is turning bullish. We can see bullish reversals developing here and bearish exhaustion present. This is an indication that during the last 5 months of consolidation, the bulls are slowly regaining back control, which will eventually result in a reversal, as it is a representation that the selling pressure is drying up. The bears are getting exhausted. This is a good indication for continuations and is what we like to see in consolidation patterns, for especially continuation patterns. So we can see if the RSI breaks upwards here in the weekly, that would tell us that for the first time in 5 months, the weekly momentum has flipped positive and the probability we see a directional continuation upwards significantly increases. For Bitcoin to enter that high time frame downtrend, we would need to invalidate the structure of which the bullish momentum is building, okay, to increase the probability of a high time frame downtrend, thus a breakdown of the channel, which would invalidate the expected directional continuation upwards as a consequence of the structural formation which has been occurring over the past 5 months. In addition to that, if we were to see something such as, let's go ahead and just get the settings up over here, indicator, title, perfect. If we saw something such as this, if we went to a 3-day chart, a loss of the Gaussian channel 3-day level, this would also be a strong indication that the bull market is coming to an end, and of course, a high time frame downtrend is starting. The last time we broke the range low of the bull market channel, the sort of Gaussian channel, this is going to be the range high, which is going to be essentially now, when we are above it, equivalent to the range low. The last time we broke above that key shifting point was back in January 2023. We can see we have not done so again. So if we do lose that 3-day Gaussian channel level, that would indicate a high time frame downtrend. That level lines up around $57,000 now, which is actually above the downtrend of this channel, which again tells me it's very highly unlikely we retest the low side of the channel again without invalidating the structural formation. Anyway, guys, we'll leave it there. Thank you for tuning in. Remember not to get caught up in these short-term fluctuations. It is easy to, see Bitcoin go up and then we see a little bit of a correction and start panicking. Don't panic. I personally always tell you, everyone that I talk to when it comes to trading, if you feel any emotion, whether it be euphoria or whether it be fear, that is your body telling you, that is your psychology telling you that your risk allowance on the positions that you have active are not in alignment with your risk tolerance, okay? That is a recipe for disaster. It means you are over positioned, which again will only end in two scenarios. Number one, you get lucky and it plays out. Number two, it goes horribly wrong and you end up losing more money than you can afford to lose, and you get put into a cycle of revenge trading and it goes all downhill from there. So if you're stressing out about the market, maybe take a step backwards and consider, am I overexposed? Am I using too much capital? Am I following what my conscience is telling me, or am I just taking too much of a gamble over here for something that may not or may not occur? So always consider your own risk tolerance when trading. Again, everyone's scenario is completely different. It is impossible to tell you what to do. You have to decide what you are affording to lose, what you are able to risk on your own. That is something you have to decide as an individual trader, and it's something that you have to decide every single time you open a position, every week, every day, every month, every year. That may change, that may not change, but you have to consider it. So if you do feel yourself stressed, if you do see yourself not being able to take your eyes off the charts, those are all massive warning signs to you. These aren't healthy things. Trading should be quite a calm and relaxing thing. It is only stressful when your emotions get involved, and your emotions only get involved because of fear of loss or the potential euphoria of gaining a significant amount, greed in other terms. Okay, so watch the charts, pay attention. Hope this video helped, and I'll catch you guys in the next video on Thursday. See you then.